Joining me now, UBS Managing Director Jason Katz and Circle Squared Alternative Investment CEO Jeff Sica. Jeff Sica, I will begin with you as you look at the horizon across the pond and in the Middle East, plus the numbers that we've gotten that would indicate the Federal Reserve is not done hiking interest rates. What do you interpret from both of those?
Well, I think if you look at the market last week got hit with this horrendous news last week, and the market did fairly well considering what the news they had to digest. And what we're seeing now is the focus, as dismal as the headlines are, the focus has been on the Federal Reserve. The focus has been on the price of oil. And what I see is oil is the key right now, and especially what ends up happening with Iran if they get involved. Keep in mind they control the Strait of Hormuz, which is where a lot of oil flows through that supplies the world. So if Iran gets involved and we see oil prices move up and the Federal Reserve backs off their potential of slowing down the interest rate increases, I think we're headed for a difficult time.
So you look at the Strait of Hormuz, and again, Jason, this does matter to Americans here in the United States who are investing in, let's just say, ExxonMobil or Chevron, or some of the foreign oil companies like Shell and BP. Shell hitting for the second day in a row a 52-week high. The Strait of Hormuz is that crucial choke point, as Jeff correctly points out, where basically, you look at it between the Gulf of Oman and the Arabian Sea and the Persian Gulf. Do you pour into oil stocks? Oil has been remarkably, just the pure play crude, West Texas Intermediate has been remarkably calm.
The short answer is yes. The group is up, only 6% on the year? It doesn't compute when you have oil probably heading to $95 a barrel, predicated on what Jeff here has shared.
Why do you say probably? Because right now we've got West Texas $87, up just 1/3%.
We're in the early innings of this conflict, unfortunately, and it looks like it's heating up. And I think the world's getting the memo that while Israel and Palestine obviously on the margin don't affect the oil markets, their neighboring countries do. So oil's probably doing a beeline, in our humble opinion, to $95 a barrel. And when you have an industry that for years was encouraged to cut production, to raise their dividends, to buy back stock, and now they're reversing course. You're seeing M&A activity pick up in the group. You're seeing production slightly pick up. So I think there's a great opportunity. It's one of the laggards relative to the rest of the market. It's very investable here.
Okay. Do you like the U.S. or the foreign names?
Both, any and all. Anything with a pulse regarding oil, I think, is buyable at these levels.
Jeff, putting that aside for the moment, let's bring it back stateside. Is there any play to be had with, for example, the U.S. car makers during this UAW strike? You've been watching that, and the big three, just depending on which way the negotiations are going with the auto workers union, up or down?
Well, I think what's happening, and is I was supporting the workers, but what the UAW is putting the consumer in a position where they're going to be forced to go buy non-union cars because the prices of manufactured cars in the U.S. is going to increase dramatically. You're going to have a lot of the big winner in this, as unfortunate as this sounds, is the big winner is Mexico, because a lot of the production is going to move offshore. So I'm very worried about the big three in the U.S. I'm very worried about their future. I'm worried about the workers in general. I think the UAW has overplayed their hand, and I think they're headed for some really difficult times.
Jason, the Fed, let's go back to that. All roads always lead to the Fed. They look at what is a very, very interesting picture and devastating, certainly from the Middle East perspective. Do you think that Jay Powell and company are in essence saying, you know what, let's hold off on the rate hikes until that cools down?
Sure, they've taken cover in terms of what's happened in the Mideast. It's no coincidence that subsequent to those horrific attacks, all the Fed speak has been, hey, the heavy lifting's been done for us, or at least to some extent. The long end has come up really precipitously. Let's see what transpires. But they can't, in the face of what we're facing or potentially facing, with good faith, raise rates right now. So I think this next meeting is definitively a pause, and we're probably done with respect to raising rates.
Well, okay, so December meeting, 38.7% odds of a rate hike. 57% that there's a pause, so both November and December. But then if you look at January, 41%. It's starting to rise because we know what we just saw with retail sales. Jason, thank you so much.